Hey traders, the Chart Guys Swing Report newsletter is currently live. In the description of this video, there are two links. The first is to the sign up page where you can also get emailed an example of a previous copy. And the second is to an in-depth video to let you know exactly what the Swing Report entails. Appreciate your attention. Let's get on to the charts. Hey trading friends, checking in on the market, and today for me was marked by a save from the tech bulls. We've certainly seen that many times, but this is another example where over the last few years, as I've shifted my focus from SPY to the major components that make up SPY, healthcare, tech sector, financial sector, the biggest takeaway for me has been saving from getting faked out. If you only allow me to look at the SPY chart today, I would have made a bearish entry in two spots. Either number one, looking for this morning's bull move to set an hourly lower high, and I actually said during the live stream, if we get to 316.50, I'm going to start scaling into top fish. So I missed out on that opportunity just because it didn't get quite extended enough. I wanted a little bit less risk to top fish that high of yesterday. But we then dropped down and broke the low of yesterday. That confirms an hourly downtrend. We went straight from that low of the day with a solid bounce and then closing up at the high of the day. How do we prevent from getting faked out and not getting frustrated that technical analysis doesn't work? If you looked at QQQ, we held the low of yesterday. So yes, breaking SPY low of yesterday is step number one for the bears, but the whole time I'm sitting there and saying, if QQQ does not break 256.30, the SPY bears will not get any follow through on this break. We held that low, SPY bears got no follow through, bulls win the day. So it is possible that SPY is a daily bull flag, absolutely. We need an hourly trend change back to the bulls, and this move, while impressive, is not an hourly trend change just yet. So we'll be watching that. And the other thing that I'm watching for is when QQQ does consolidate, which we know is due to happen sooner rather than later. We have a higher low every day for the last 6 days. I want to see, does that money go into the financial sector, and does it go into the cruises and airliners and all these laggard sectors? We've seen this before. We're looking at a similar move to right here. And then we pulled back, set a daily higher low, and now we're doing that same kind of move. And if we look at our individual names, Amazon, same move, solid pullback, same move. And you can go through the list. Apple, not as clear. Microsoft, very similar, higher low every single day. 1, 2, 3, 4, 5, 6 days into daily consolidation. 1, 2, 3, 4, 5, 6. We did break the low, but just barely. You get the idea. Look at Netflix. These are the same moves taking place. So I am cautious. The tech sector right now, there's no sign of weakness, but we just know daily consolidation is due. And I want to see, where do tech sector profits go? Do they just cycle into one of the weaker sectors? Do we see the entire market dropping? Do we see the financial sector drop when tech drops? Because if that were to happen, that would stand out to me as something that's a little bit different this time around. But I'm definitely having deja vu as to the similar moves from the mid-June bull move to the early July bull move. So IWM is still in our 2-day tightening range. We formed a lower high. Anything under 146.69 was a lower high. We set it at 145.70, and now it's up to the bulls to hold 136.29. If we break the high of today tomorrow, the odds will increase that our daily higher low has been set, and we'll then be looking for the tightening range to break either later this week or first thing next week. QQQ. So we're watching the pattern, higher low every single day. If the bears do not break 256.50 tomorrow, they prove nothing to me. And all-time high is in sight, and we just had the highest close ever in the history of QQQ. XLV, looking for a daily higher low to form. Has it formed yet? No. We need to change the hourly trend to the bulls. On this current bounce, anything under the high of today is an hourly lower high. We would have to change the hourly trend for our daily higher low to convincingly be established. But we are looking for that higher low to form. Financial sector held our low 22.52, started the morning really strong. It was looking like it's going to be a financial sector day, but we rejected from the high of yesterday and convincingly pulled back. We had a double top at the high of yesterday, a double bottom at the low of yesterday. So let's try that again. We started with the double bottom, a very significant bullish response to that double bottom, rejected from the high of yesterday, gave it all back, double bottomed again, triple bottom, tightening range, bear break with no follow through, and then back to the high of the day. So daily time frame needs to see a bull break of 23.66 to change the daily trend back to the bulls. And again, what if I am a raging market bull with all of my money in retirement positions right now, I want to see QQQ pull back and set a daily high or low. But I want to see XLF change its daily trend bullish when that happens, because I know that the overall S&P 500 will not see notable weakness if at least one of our major three sectors is seeing bull moves while the others are consolidating. I view it like a team game, and one guy is tagging in the other guy so he can go take a breather. And that's what these sectors need to do, that rotation, to keep things strong. If we see the tech sector consolidate, just looking for daily higher lows, but XLF drops down and breaks 2252 at the same time, then the S&P 500 pullback is going to be a lot more considerable in my opinion. So the relationship between QQQ and XLF is going to be key for me over the next few days. Biotech bulls, all-time, nope, double top. We failed to break the all-time high by 3 pennies. That was a nice top fish, and we ended up pulling back significantly, but by the end of the day, bulls recovered, and we're right back at the all-time high resistance, and the bulls want a convincing break of 117 to see follow-through after maintaining the daily uptrend. SMH, semiconductors, could this be a daily bull flag? Absolutely. Resistance is 158.10, and we're right there. If we fail 158.10 and break 155.32, we can say, okay, it's not a daily bull flag, but we will still be looking for a daily higher low compared to 145.85. Checking back in on the VIX. So the VIX, daily lower high is looking set. And now we're looking back down to 24.90. Have to see 24.90 hold and a bull break of 30.20 for the momentum to shift back to bulls, which would pretty much mean SPY failing to confirm a daily bull flag. I would be very impressed if SPY does pull off a daily bull flag. Yes, that is a clear daily bull flag setup, but knowing how extended QQQ currently is, and knowing that we would need another, let's see, what percent do we need? Well, we only need 0.5%, so I take that back. I was going to say, if we need a couple percent and QQQ is that extended, I would be surprised if the bulls can pull it off, but we're 0.5% away. I think I pulled a muscle while talking. We're going to power through, but I'm feeling some very strange things while I'm talking here. So gold. That's not gold. So gold on the daily time frame, bull break. Again, getting this follow through. Nice and clear hourly uptrend. Still intact. Exponential support held last time. It's being tested again. If we lose it, we zoom out and we look for a 4-hour higher low. Anything above 1791.52. So plenty of space to maintain. 4-hour uptrend. If we lose it, we zoom out and we'll look for a daily higher low to then form. Exponential support is a guide on the daily time frame as well. So metals, incomplete control. Silver, nice big bull follow through as well. Daily bull break. Hourly uptrend. If we lose it, we zoom out and we look for a 4-hour higher low. And the metals are performing well. And after a green day in the market and a green day in the metals, miners are thriving. Miners have set a daily higher low every single day for 7 days now. And we're in breakout mode. So metals and miners, nice, steady, consistent gains. We're not seeing these huge, electric vehicle breakouts where we're going 20% in a day, but it's slow and steady. And those with these positions in retirement portfolios certainly appreciate slow and steady. So congrats to those bulls. The only exposure that I currently have in the metals is physical and onto oil. So oil did not confirm the head and shoulders. We were watching for the potential of a head and shoulders. We had to break 39.90 to confirm it and look for a daily lower high to be set, but we never lost the uptrend. 39.84, higher low at 39.90, higher low at 40.25. Even a bearish reaction to the inventory report today still maintained 4-hour higher lows. We do have a double top at 41.08, but if we do not break the 4-hour higher low pattern, we know the bulls are going to keep complete control. So 41.08 and 41.63 are the only short-term resistances, and if the oil bulls are able to break to a higher high over the high of the COVID top, then obviously that's going to increase the probability that the S&P 500 can see continuation back to its COVID high as well, due to correlations. I'm not saying one's driving the other necessarily, but what I'm saying is there's no fear in this market right now, as we're seeing lots of asset classes with strength. Cryptocurrency has had a very bullish few days with a lot of the altcoins and smaller names running. We certainly know the metals are strong. Oil's holding on just fine. The market's holding on just fine. So no fear at the moment. We know that can change on a dime, but there's no sign of it right now. Natural gas daily consolidation underway. We're going to be looking at anything above 1562 as a daily higher low. 4-hour time frame, you can still consider this a 4-hour uptrend. The last clear higher low was 1691. With the size of the pullback, next time we bounce, we will be watching for a 4-hour lower high compared to 1837. But you could still consider this a 4-hour uptrend at the moment. And as far as UNG is concerned, we're just looking for a daily higher low on this current pullback. Lots of space to form it, anything above 974. So I'm going to attach a little trade review that I did in the middle of the day on Tesla into at the end of this video. And I did end up trading it more as the volatility really increased after that video. I think I made that video right about here. And I missed some of the downside, but you know I love oversold bounces, and I was all over this oversold bounce, even selling a bit early and still having a solid win. So today was marked for me by just bolt directions of Tesla consistently. And again, Tesla's going to be my day trader for at least another week, in my opinion. Could it be a bull flag? Yes, absolutely. We had a bear break without significant follow-through. And loving the volatility in Tesla. Looking for an hourly lower high on this bounce. As far as NKLA, we were looking for a bull move on NKLA. And I look at this, and I didn't trade on NKLA today, and I missed out on the bounce. So there's a number of factors at play here. What could I have done differently? I could have swung a small quarter position that I had at 42 from the end of the day yesterday into today, and that would have gone well, obviously. Why I didn't is yesterday was a big day, and I just wanted a clean slate. I just wanted to wash my hands and say, okay, locked in a great day, not thinking about anything overnight, fresh, clean slate in the morning. Obviously, in hindsight, should have kept that small position. But when I look at this, I say to myself, you know, I don't feel FOMO. I don't think of, oh, coulda, woulda, shoulda, because that's not a setup that I'm looking for. For those of you that have been watching this channel for years, you know that we were all over Canadian MJ oversold bounces, and we were nailing them time and time and time again because we love oversold bounces, and the setup there would be gap down open, quick flush first thing, V-shaped recovery, bounces underway, and not a low of the day close. In this instance, we closed at the low of the day, we get an upgrade in extended hours, and then we see the bounce take place. That's shenanigans. And shenanigans are a part of this game. They happen all the time. But in my opinion, big money flushed it down, loaded as many shares as they could. Upgrade comes out, and here you go. Here's your 30% bounce. So I don't have FOMO, 37%. I don't have FOMO missing that move because it's not the setup that I was looking for. The trade didn't come to me. And I also don't have FOMO because I know I've seen this setup 50 plus times in the last few years trading. And I know I'm going to see it again dozens of times over the next few years. So again, unless you need to get rich really quick to pay off the mob or do something like that, then you're feeling FOMO. But if you're in this game for the long run and you're looking to do this, I'm almost on my 10th year now, and I've seen everything time and time again. It's all cycles. There's always another trade. It always happens again. Tesla has done the same thing multiple times. Tesla had a huge all-time high breakout, a huge pullback, a huge bounce, huge volatility, and we're doing it again less than 6 months later. So Again, if you're in this for the long term and you are looking to play this game for 10, 20, 30 years, you will see these setups time and time again, and all we can do is learn from them. So I'll make a little mental note and store it in my library. Okay, we closed at the low of the day, 4-hour RSI was crushed. Even again, if you give me that same setup again, I'm not going to take it because it's just not the trade setup that I like for risk to reward to be favorable for me. Congrats to those that did get the NKLA bounce, and congrats to the Tesla shorts. We had a nice top fish first thing this morning, rejecting from that level yet again. So we had the top fish from $14.37 yesterday, rejected by $7.50, and then another one today, rejecting by $12, and finally getting that flush. I'm done talking. Maybe I'll ice my neck, and I'll see you all soon. Have a good rest of your day. Doing today's little trade review while it's still fresh on my mind as the market is still currently trading. So started this morning by shorting Tesla. Didn't get a great fill using a market order when the bell rang as the market makers had not tightened up the range yet. So ended up getting filled. I pressed, short at 14.12, but didn't get filled until about 14.08 or 14.09. Got a nice new low of the day, but we never saw follow through in the morning with S&P 500 and QQQ weakness. So we then ended up bouncing. We set a 5-minute higher low, changed the trend, but it was just a 15-minute lower high, tightening range. And then the S&P 500 and SPY dropped considerably, and Tesla didn't really dump as much as I was looking for it to. So I ended up with a decent little trade, bearish, and ended up covering, I forget where, but what I want to highlight is what I've done since I sat back down after lunch. And it was just looking at the 5-minute trend, a clear 5-minute downtrend, and using SPY. I was watching SPY the entire time that I'm trading Tesla. And the only thing that I was doing is aligning to ensure that the most likely scenario on SPY would help my Tesla position, whatever it was, because I'm now playing both directions. And that's me saying I want the wind of the overall market at my back. And I remember as I was ending the live stream, I said, okay, ending the live stream, if I take another trade, I want to see a 5-minute lower high on SPY and then confirm the downtrend. And at that same point in time, when SPY is seeing that 5-minute bounce, I want to see Tesla with a 5-minute lower high as well. So I did end up shorting Tesla at 14.03 here, and then nice follow through. So it's using SPY to my advantage. So what I was looking at here, I entered bearish on this 5-minute lower high. And I was looking at my stop being, trying to find which one that I entered on. I believe it was this one. So looking for my stop was going to be 13.05. Yep, that's where I put my stop to give a tiny bit of wiggle room over the high of this resistance. And I entered bearish on this bounce, and I entered bearish at about in the 13.88s. So stop set above the high and looking for a 5-minute lower high. At that point in time, it is 1:30. So at 1:30 on SPY, what was going on? I was looking for this bounce to be a 5-minute lower high. So we set that 5-minute lower high right when Tesla set its 5-minute lower high, and then we started pulling back, and Tesla dropped down and broke the low of the day. So then I say to myself, okay, 5-minute oversold conditions, we are still in an hourly uptrend. Tesla's hourly support from yesterday is 1366. So I know that while I see 5-minute RSI getting oversold, I cover my position. So I covered my position, and let me pull up. Let's see. So I re-entered a short here. I covered right here because we bounced off 1368, which was 5-minute oversold conditions, just above 1366 hourly support. I then went long, looking for a 5-minute oversold bounce off of that support. I sold half of my long to protect. I put my stop under 16 or make that 1368 to be break-even risk, and then I sold the second half of my long. So someone commented on the video yesterday, and they were right. Those are very small moves. Absolutely. The more capital you're using on these small moves, the more dollar volume or the more capital gains you see, and the more it's worth it. But think about it in terms of percentages, not in terms of dollar amounts. This right here, this trade, is a 1% trade. I locked in $10 to the downside, and then I locked in an average of, 3 and then 6. So roughly an average of 4.5, we'll call it, on that bounce, maybe a little bit less. Either way, that's 1%. So I just made 1% in the afternoon after already having some small winning trades in the morning. If you are making 1% every day, you will never have to worry about money again. So it sounds easy. It's really difficult to do, to make 1% every day. It takes a ton of discipline. But my point is, having 1% as a goal on a trade is just fine. Because again, it will add up, especially if you don't even have to compound gains. If you make 1% every day, you're going to be just fine. If you're compounding gains and making 1% every day, you're going to be very wealthy very soon. So don't let small moves discourage you from whether a trade is worth it or not. Even if I was trading with 10 times less money than I was trading with, I'm still making, enough money that it's worthwhile. And that's my note on this trade review. Building a base of support here and watching to see. And another reason I went long, so not only did I have Tesla hourly support, Tesla 5-minute oversold conditions, look at what SPY was doing at that point in time. I was watching for SPY to bounce off of 1358 and form a 5-minute higher low, which is exactly what this candle did. We just gave it back, but we held that support for a 5-minute higher low, and the fact that I was looking for SPY to set a 5-minute higher low while I was looking for a Tesla 5-minute oversold bounce gave me the confidence to make that long entry off of the hourly support. So just little flips in both directions, having a much less significant day on Tesla than yesterday. Look at the range of Tesla yesterday compared to today. Certainly makes sense that there's less profit because there's a lot less volatility and a lot less opportunity, but certainly worthwhile, and still have not even started daily consolidation. So I'm still watching for daily consolidation, and if I were going to enter bearish again on Tesla at this point, it would have to be a 15-minute lower high in the 1380 range if I were going to get interested again with, well, there's plenty of time left in the day. And I would want to see SPY breaking this 5-minute tightening range bearish.